Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame bullish scenario where we're looking for a double 1-2 for much higher prices to come. In this particular scenario, what is interesting is that in green we have the higher degree count and in blue we have the lower degree count, meaning that in green we have a 1, 2, 3, 4, 5 wave structure, an impulse to the upside, and then inside wave 3, the green wave 3, we have the blue count being a 1, 2, 3, 4, 5. Now what is so interesting about this scenario is that a lower degree count should normally be shorter in time and price compared to a higher degree count. That is why we have degrees in Elliott waves, right? That is why if you put a count on the chart and you go to the settings, we actually have degrees, and these are related to time frames as well. Super millennium can be a decade chart, cycle can be the cycle monthly chart, and once you go to the micro, sub-micro, minuscule, you're going to be counting on a 1 minute, 5 minute or 15-minute time frame. So it is very interesting that the lower degree Elliott wave count in blue is actually for a wave 1 longer in price than the higher degree wave 1, as it just hit the 1-to-1 over here, while the blue wave 2 is longer in price and time compared to the higher degree green wave 2, which is of course not really what you want to see, and it does impact the probabilities, right? It's still a scenario. Can it happen? I mean, there's no certainties in trading, but it does impact the probabilities. What we did saw over here, at least, are bullish CVD divergences, higher low on price, lower low on the CVD, which therefore gives a push towards the upside as market shorts are being absorbed by limit long orders for then a big nice push towards the upside. Of course, we had the news week as well. And what you then also see is that the 1.618 of the higher degree Elliott wave count has been hit, trend-based fib extension taken from the low to the high of the green 1 to the low of the green 2, but now a higher target, which is a bit funny, is the 1.618 of the lower degree. So the 1.618 of the lower Elliott wave degree is a higher target than the higher degree 1.618, which of course is a little bit weird as well, with the blue 1.618 taken from the low to the high of the blue wave 1 to the low of the blue wave 2 over here. So that is quite fascinating indeed, and again it lowers the probabilities a bit. Now in this particular scenario, however, what we can look for is a 5-wave structure to the upside, which might already be finished, or maybe one more push to the upside, as I'll show in a second, before you then go into a wave 4, 5, 4, 5 type of move. Now, if we then zoom in to this structure over here, then this is a count that we can keep an eye on. And it's mainly interesting because of the triple top that we have. If I zoom out and zoom in again, high number 1, high number 2, and high number 3. Lower highs, 3 in a row. Now, at the moment in time, when price was ranging over here, I kept an eye on the triple top when price moved to the upside here. However, this was then a finished WXY, found resistance, bearish CVD, moved to the downside. Very nice indeed. So this triple top is still untouched, but you can imagine there is some liquidity up here, and you also have an inefficiency and gap over there as well. So that is a very interesting target for a potential wave 5 in this scenario to then consider or at least start another range again. Now locally 1, 2, 3, 4, potentially 5 is in, or we get one more push, and I think I would prefer to see at least one more push. Currently, however, we did take this high over here, so this high has been taken on the chart, as you can see. Liquidity, swing failure pattern, and we might now go into a nice weekend range over here. If we zoom out again, go to the bearish scenario, then in this particular scenario, we're looking for a 3-wave move to the upside, because in the bearish scenario, we're looking for a bigger zigzag for lower prices to come, where you then also take the double bottom at 24.7. Now, Bybit already wicked to 23.6, already took this low over here, which is interesting, as by far most commonly, big wicks to the downside or the upside, like this one over here, do tend to get filled. And of course, the Bybit wick over here is not yet filled, and we have a double bottom, which is always interesting, so we got to keep that in mind for sure. Now, in this particular scenario, what we're then looking for is a 5-wave structure to the downside for then an ABC structure to the upside. Wave A over here, finished WXY in then a wave B, looking then for a wave C towards the upside. In this scenario, the most common target area for a wave C is between the 1 and the 1.236, and also a target that does tend to get hit quite often is the 1.618. And what is nice about that one is that also there the triple top is very important, as we again have liquidity, so we could get a push up, end of C, and then see a push towards the downside. Now in this scenario, of course, you prefer not to really see price moving higher than the 1.618 sitting at 30.7k. The wick on the Bybit chart and some other charts did go to 30.6k, so potentially when grabbing this liquidity you fill the wick, maybe even swing fill your pattern the wick on, let's say, a Bybit, and then move towards the downside in this particular scenario. If we then also zoom in to this wave C to the upside, right, in an ABC, then this is something to keep an eye on, especially the fibs over here. So we have a 5-wave structure in this wave C, soon to be finished, and after this wave 5, important difference with the more bullish scenario, you want to see this end, because in the 1-2-1-2, this potential 5-wave structure is then only a 3, then you get a 4 and then a 5. So the moment we would take the triple top, get into a sideways range, but then move up again, probabilities are going to be higher for continuation longer term to the upside. If we drop down and we're going to invalidate a higher degree wave 4, which is then yet to be made, of course, then we can start and look towards the downside. So what's happening locally here is very, very important for price indeed. Now in this move towards the upside over here, potentially a wave 5, we could be looking for a wave 4 at the moment. It's a bit odd to really count this wick into some structure. I now have a 3 over here and 4 down here, but this wave 4 might have to go to the left, with this wick being some sort of 3-wave very quick move to the downside, but I now put it here. So potentially 5 can already be in, and then a 1, 2, 3, 4, 5. So preferably price is going to range inside these fibs over here for then a potential wave 4 to then early next week grab the highs and the liquidity as well as from the triple top, ending a wave 5 for then a move to the downside again. And then that move to the downside is going to be very, very important for the bullish and the bearish scenario, because in the bullish scenario you want this to be a wave 3. You're going to be looking for a blue sideways range and then a wave 4 for then continuation up in a wave 5. But in the bearish scenario, the end over here of a wave 5 is going to then be the end of your wave C for a move towards the downside. So that is very, very important indeed. Now if we look at the fibs that you see on my chart, pulled from this low to the high over here to just make it safe, basically you don't want the 0.618 being hit, sitting at 28.9k. Most common targets for a wave 4 are the 382 and the 05, the 0.236 also kinda, but we already passed it, so this is the most common target area. You have a bit of a range of support, but you don't really want to see this broken and price going to the downside, because if we do hit the invalidation, probabilities are going to be much higher that we do have more downside to go. If we look at the two lines on the chart over here, price moving towards the upside, hitting this single print horizontal at 29.4k. As explained in the live stream earlier today, this is like an inefficiency, basically the same as a gap basically on the chart, with a candle over here gapping. Now what's interesting is you can use these as support resistance flips. You enter the area once, like the inefficiency here, very often you get a reaction, which can be scalped of course, but the second time you come back, and especially if you start to close candles inside on the lower time frames, probabilities really increase for price to fill the whole inefficiency, take the high, which in this case of course happened very nicely, for then a move towards the downside. If we look at the CVD divergences, we did have bearish CVD at the high over here. As you can see, if I zoom in on the 3-minute chart, lower highs on price, higher highs on yellow, bearish CVD divergence, as well as on blue, lower high on price, but also on blue here, higher high on the CVD. So we did have some bearish CVD divergence, which means there is absorption of market longs with a limit short, pushing price towards the downside. So if we then zoom out and have a look at the probabilities of the different scenarios, then Well, based on my explanation, you kind of already get an idea that the double 1-2 over here just doesn't really look great. Is it possible? Yeah, you know, it's always possible. There's no certainties, but at the moment, it doesn't really look too great as explained compared to potentially the more bearish scenario. Now, most importantly, local price action decides. There's no certainties in trading. Everything is possible. What's going to happen over here, as also mentioned, is going to be very, very important for a 3-4 continuation in a wave 5, or if we get another move towards the upside, that could be the end of a C, and then you want to see downside. You don't want to see a range and then up once more, right? So we have to wait and see what price does more locally. But I gotta just say, the double 1-2, if we talk about Elliott Wave probabilities, the double 1-2 at the moment has a lower probability than a corrective structure just because of everything that I explained. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.